Nigeria's eNaira was one of the first of a growing number of central banks wanting to launch their own. But what do central bank digital currencies, or CBDCs, actually bring to the table?
From the customer's point of view, the utility that the existing mobile money provides is very similar to the utility that CBDC can potentially provide. And there are already like 25, mobile money operators. So somehow the CBDC might not mean like a game-changing value addition.
In today's program, what we can learn from Nigeria's CBDC experience and how its central bank might convince more Nigerians to use it.
The next 2-3 years will be very important. They will need to make the right strategy in terms of setting relationship with the mobile money so that, either complement or substitute it. Probably in Nigeria's case, it's going to be a complementary model that makes sense. My name is Jookyung Ree. I'm an economist, IMF economist working for the African Department, currently working on Zambia, but my previous assignment was in Nigeria.
Jookyung Ree is also the author of a research paper called Nigeria's eNaira, 1 year after. Check it out at imf.org. So Nigeria was the first on the continent, or the African continent, and only the second in the world to launch a CBDC, or central bank digital currency. Why would it choose to do that? With all the other challenges the country faces, why did the government make this a priority?
That's a very interesting question. I think that certainly there has been some political backing because the former president, Mr. Buhari, himself was quite interested in doing something digital and sort of Nigeria being seen as the champion of some sort of, innovative digital revolution in Africa. So probably that's one of the political drive that is coming from the firm, but this speculative. Based on the central bank's own account of their motivation, essentially, three big reasons. The first motivation is financial inclusion, which is not really much of a problem for many of the advanced central banks. For example, Bank of England recently did quite deep research on whether or not to do a CBDC on its own. And for Bank of England, financial inclusion is not much of a problem. But in Nigeria, a lot of people don't have bank accounts. It's a big country, populous country, so 38 million others don't have bank account, which is like almost 40% of the total other population.
38 million adults don't have bank accounts.
Right. So that's quite large. But, Nigeria is one of the most advanced countries in sub-Saharan Africa in terms of the mobile phone penetration. So, most people just have not fancy iPhones, but, the simple fold foldable phones or the feature phones everybody carries. So the gap between digital penetration and banking sector penetration, basically makes people think that, if we make all the financial access digital, probably we can just do a very quick and large fix to this financial inclusion gap. So that was one reason. Mm-hmm. And the other reason is remittance. Nigeria is one of the largest remittance recipient country in sub-Saharan Africa before pandemic. The size of the annual remittance that Nigeria alone has received was close to $25 billion per year. That's a lot of money. Yeah. But since pandemic, for a lot of reasons, the remittance really fell down quite dramatically, and it never recovered to the pre-pandemic level. And then, along with many other developing countries, they thought that making remittance cheaper might be the way to go. Currently, for remittance through the what's called international money transfer operators, IMTOs, like Western Union, typically costs like 7 to 8% margin in every dollar you send. So, and with the CBDC, you can, in theory, bring down that cost to close to zero. So, that was another big reason. Third reason is the informal the presence of large underground or informal economy in Nigeria. So the size of the informal economy in terms of employment is almost 80% in Nigeria, because a lot of people in non-urban area, they're all sort of informal. So informal economy means that a lot of money are going outside the banking system and not really tracked and really not captured by the tax net either. So CBDC, like the model that Nigeria use, is so-called account-based, which is different from like crypto coins like Bitcoin, which is untraceable. The account-based CBDC should be, in theory, fully traceable if there is a need for, some sort of tax audit and stuff. So that's another motivation.
So your research is a bit of a stock taking on this CBDC that was launched now. In what year was it launched?
That was 2021.
Okay. So
October, I think, yeah.
And you started doing your research about a year after it was launched?
Yes.
Looking at, how effective it was. So how have Nigerians accepted the CBDC? I mean, are they using it to the extent that they were hoping, or at least that the government was hoping that they would, or the central bank was hoping that they would use it?
That's sort of a mixed bag because, first of all, it's very difficult to get any statistics or data on CBDC usage. So I was very privileged to have the courtesy of the central bank to share the data, very granular data with me. But the data essentially says that after 1 year, the number of wallet CBDC has to be downloaded as a wallet in your phone, like an app. And the number of downloads was less than 1 million, something like 860,000 as of end of November. That's the last data point that we got. That's compared to Nigeria's huge population. It's like less than 1% of the total number of bank accounts.
Wow.
So that's fairly small, fairly modest, if I may say. And what is a little bit more somewhat disappointing was a slowness in terms of the usage, because a lot of wallets that has been downloaded were not actually used. They were remained in the state of dormancy. My paper found that about 98.5% of the total wallets that has been downloaded was not used more than once.
Wow.
Since for any given week. So that's fairly low. But I would say that it was not really a big disappointment for the authorities, because the central bank from the beginning said that we are actually providing ourselves to the guinea pig to the rest of the world. We are the early adopter. We're going to do it very cautiously. So they always say that they were going to take a baby step approach. So
adopting has not gone well, but it has been, over the course of the year or since it was launched, it's been very stable. There haven't been any crises in terms of it crashing or any, the infrastructure seems to have worked.
That's a very interesting, important question. In fact, in terms of, because there are other central banks in the Caribbean region that had outage, just several months after launching their own CBDC. And if that happens, there's just the credibility and trust of the new system will go down the hill. And that didn't happen in Nigeria. So, in fact, it's quite laudable that the system, even though that adopted very sophisticated and experimental technology like distributed ledger, blockchain, all these things, it showed operational resilience, and they were able to establish 24/7 continuing operation without disruption for at least 1 full year and up to now.
It's interesting. So, CBDCs is new to Nigerians, but mobile money is not. They've been using mobile money for many years now, and mobile money seems to have been sort of taking care of a lot of the inefficiencies of paper currency. how do CBDCs or how can CBDCs complement the mobile money network, and how successful has it been at doing that?
Mm-hmm. So the big discussion that goes beyond just the case of Nigeria is the relationship between existing private digital money. Typically, it's going to be mobile money because mobile money has been very successful across the continent. Outside Africa, the most probably successful example would be India. Mm-hmm. But here it's been very successful, and it has been really leading digitalization of finance, digitalization of the economy, and so on. And given that background, whether CBDC at the retail level is actually needed, or is going to be redundancy, is going to be irrelevant, doesn't really have space to grow, or is the only thing that it's going to do is to just crowd out the private sector in terms of the kind of same use cases. Right. So whether we would want to go down the route or not is something that is still being debated. And the debate is much larger than my own paper, and it is debated within IMF, within BIS, many circles now. Mm-hmm. But what I can say is that there are two models. One is the substitution model, where CBDC essentially competes with the mobile money. I think that approach can make sense in some countries where mobile money is extremely monopolized by maybe just one company. An example could be Kenya, where M-Pesa is like a 99.9% of the market. Right? In that kind of monopoly, it's going to be very difficult even for the supervisor, not only from the antitrust point of view, but also from financial supervision point of view. They become just too powerful to be regulated. So that could be a problem, and maybe public sector can be the only way to bring some sort of competition into the market. So I understand some African countries are considering the usefulness of the CBDC on that perspective. But in case of Nigeria, in fact, mobile money market is not very active as in case of Ghana or Kenya due to existence of too many mobile money, and market is very fragmented, and just interoperability between different mobile money is very costly. So in that kind of cases, probably makes sense for CBDC to become kind of complementary element of the mobile money. So both things working together in kind of integrated wallet. So if you have, say, MTM mobile money, and that is integrated with the eNaira, so that if you walk into the shop and if the shop doesn't receive MTM money, but some other, you can still pay, use your backup line, which is CBDC. That would make more sense in terms of complementarity in markets like Nigeria.
But what would be the incentive for the mobile money provider to work with the central bank? I mean, what's in it for them?
That's an excellent question. So maybe one way of, traditional way of central bank in dealing with the integrating central bank system with the private sector providers is through regulation. So just forcing them to somehow implement their interoperability or connect, at least link their mobile money wallets with the CBDC wallet is one way. But then there is also a kind of business case for both central bank and mobile money can win because in countries like Nigeria, where mobile money, there are like 25, 26 mobile money operators.
Wow, that's a lot.
That's a lot. And so it's very difficult for any single mobile money operator to be dominant. And if you're not dominant, the consumers will always be divided into various other mobile money, and that makes the universal usage of your mobile money very difficult. So if your mobile money product is integrated with the CBDC, and CBDC is more likely to be accepted by other merchants, that increases the motivation for people to actually get mobile money wallet itself. So for mobile money to increase its own penetration in the public, a regulation like this for them to mandate them to integrate, link it to the CBDC might actually be a good thing for them to enhance the attractiveness of the mobile money to the consumers.
You talked about remittances earlier, which are important to Nigeria, as they are in many countries, representing more than 5% of GDP in Nigeria. How do or should CBDCs help people send money back home?
In theory, in an ideal world, CBDC is going to kind of a direct arrangement between the last mile customer, retail customer, and the central bank without any intermediary. So if what is called a multi-CBDC system, which is actually being experimented by a number of central banks at the moment, including South African Central Bank and Singapore. Several countries group together, and they basically create some sort of distributed ledger or the centralized database system that is not just single currency, but multiple currencies. And these multiple currencies will be, me buying, say, South African rand using a Singapore dollar will be recorded in a single ledger. So single recording in single ledger means that all the transactions is going to be settled instantaneously. So that's what's called atomic settlement, meaning that it's instantaneous, meaning that there is no time gap between trading and settlement. And also simultaneous, meaning that all legs of those transactions, like in the foreign exchange transactions, in the example that we said before, Singapore dollar leg and the rand leg will be settled at the same time without any sequentiality.
So there's no intermediary banking.
No intermediary, and most importantly, that is going to not involve banking system. So right now, all the remittances are done through what is called correspondent banking arrangement, which is very costly and very lengthy, and that takes a long time. And that's also restrained by banking holidays on working hours and so on. But in this ideal world where there's a multi-CBDC system, essentially the cost of remittance can go to zero. But that's an ideal world where there is some sort of multilateral solutions. For example, organizations like IMF and BIS basically lead global initiative in terms of remittances. But we're a long way to go there because we are not even sure whether countries will really how many countries want to do the CBDC experiment.
Exactly. And it brings me to my last question, actually. So how significant is this eNaira experiment for Sub-Saharan Africa's broader financial system? Will this prompt, do you think, other countries to adopt their own CBDCs?
Right. That's a very interesting question. And in fact, that goes much beyond my own paper's focus Nigeria. I also work as a part of the IMF's African Department's CBDC group network. And we are conducting a survey of all African countries on where they stand in terms of CBDC plan and what their thinking is, all these things. So we don't know yet, but I think Nigeria's first year experience really gives kind of mixed signals to the countries. Positive signal is in terms of the fact that Nigeria was able to build and maintain that system without a major breakage, which itself is something quite impressive from Sub-Saharan African perspective, because everybody would have thought, probably it's going to be dead on arrival type of, failed experiment. And it didn't happen. Which it was not. So that basically shows that, maybe more motivate many countries and maybe give an inspiration to other countries. Nigeria can do that, Ghana can do that, or South Africa can do that. Kind of sentiment can arise. But at the same time, Nigeria was not able to still make a breakthrough in terms of the mass adoption. So it's still very, very limited adoption there. And to make a breakthrough, the next 2-3 years will be very important. They will need to make the right strategy in terms of setting relationship with the mobile money. So that, either complement or substitute it. Probably in Nigeria's case, it's going to be a complementary model that makes sense. Maximizing the synergy with the digital revolution or this digital innovation that is going in the private sector. And then making a breakthrough in terms of remittances. The Nigeria's specific reason why it cannot work in remittance so far is because the official exchange rate has long been controlled. And if you go to black market very easily reachable and very large transactions in the black market, the spread until a while ago has been like 78%.
Wow.
So in terms of dual exchange rate system, and if your CBDC offers only official rate, which is hugely penalizing, nobody's going to want to use that route. Everybody is going to just carry US dollars, and then So, but then Nigeria made a big move lately in terms of floating the exchange rate.
Okay.
So I think all the signs are quite hopeful, and the new government, definitely has a good opportunity for them to harness.
So it's a question of creating incentives. Consumers, users, potential users want to use it because they get some kind of benefit from, whereas it's not all that obvious at this point.
Definitely.
Jookyung Ree is a senior economist in the African Department with the Zambia team. Thank you very much.
Thank you so much, Bruce.
You'll find Jookyung Ree's working paper on the eNaira 1 year after at imf.org. And you can hear more IMF podcasts on Apple Podcasts or Spotify or wherever you listen. You can also follow us on Twitter at IMF_podcast. I'm Bruce Edwards. Thanks for listening.